All right, well, let's get started. Good evening, everyone. My name is James Delatry, AVP for Research and Director of the Office of Entrepreneurship and Commercialization at Penn State. I am pleased to introduce tonight's panel discussion entitled Find the Right Egg for Your Basket, Modern Financing Options for Your Venture. Now, before I introduce our moderators and panelists, I want to thank you for being part of Startup Week powered by PNC. Startup Week is a university-wide event that connects students with innovative alumni and pioneers. These pioneers and innovators have had success in a variety of industries and disciplines. Throughout the week, students discover, explore, experience, and celebrate entrepreneurship and find new sources of inspiration. We have over 75 virtual events scheduled for this week, so that is awesome. These events are hosted by faculty, students, staff, academic colleges, and Commonwealth campuses across the state. So there is truly something for everyone. For more information on Startup Week powered by PNC, including a full schedule of events, please visit startupweek.psu.edu. Participants can engage with and follow Startup Week on Facebook, Twitter, and Instagram at PSU Startup Week and hashtag Penn State Startup. So I am pleased to welcome our friend Jim Hoehn, Regional President of the Central Pennsylvania region for PNC Bank. Jim is going to moderate our panel this evening. Jim joined PNC through its acquisition of National City Corporation in October of 2008. Before assuming his current role in 2011, he served 8 years as Regional President of the Dayton, Ohio region. During his 12 years at National City, Jim served as Senior Vice President and Strategic Planning Manager, as well as CFO of Corporate Banking. Prior to joining PNC, Jim was a commissioned Federal Reserve examiner focused on bank safety and soundness and risk management policy. Jim received his undergraduate degree in business and economics from Cleveland State University and his MBA from Case Western Reserve University. He also has achieved the designation of Chartered Financial Analyst. Thank you, Jim, for being with us this evening. And now let me introduce the panelists who will be joining us. First, please join me in welcoming David Passavant. David is CEO of numo, a fintech incubator subsidiary of PNC Bank. David was previously an early employee of successful Silicon Valley startups Deem and SquareTrade. David holds a bachelor's degree in computer science from Washington and Lee University and an MBA from Carnegie Mellon University. Welcome, David. Second, please welcome Jon Casterline, an associate on the capital markets team at SeedInvest, where he's responsible for building and maintaining relationships with key investors on the SeedInvest platform. Jon began his career at Citigroup in the private wealth division, where he helped manage over $350 million in relationships while playing a role in new client acquisition. Jon holds a bachelor's degree in finance with a minor in economics from Penn State's Smeal College of Business. Welcome, Jon. Third, we are pleased to have Natasha Bansgopaul. Natasha's co-founder and COO of Dark Matter, Constellation, and VegaX Holdings, where she's currently focused on using her experience in fintech to build the next generation of investment strategies and indices. Natasha is experienced in fintech marketing, strategy, and M&A, and has over 10 years of demonstrated leadership in those areas. She's the founder of 3 fintech companies and continues to pioneer the need for change in the financial services industry via fintech solutions. Natasha holds an MBA from Penn State University. Welcome, Natasha. And last but certainly not least, we have Matt Rhodes with us, the managing director of 1855 Capital. Focused on innovation and change management, Matt has invented new technologies, led the development of new products, built and managed large organizations, and driven revenue growth and profitability. Matt's background ranges from startup funding and management as CEO of Terranetics to leading a 1 billion plus semiconductor business as president of Connectant Systems. So welcome, thank you so much, and I'm happy to turn the floor over to Jim to lead the discussion.
Great, James, thank you so much, and welcome everyone. Thank you and good evening. I'm so glad you're here to join us. It's virtually, as I hope everyone is staying safe. We are so delighted that you're here with us tonight to really have a discussion on the critical issues of funding your startup. First of all, my brief support of commercial here is that PNC sponsors this because we believe so much not only in entrepreneurship for the betterment of the Commonwealth and really the betterment of society across the board, but really we know how well Penn State does in terms of helping support, the broad Invent Penn State initiative is great with Dr. Barron and everything that's gone on there. So it's easy for us to do that. So forgive my educational background. When someone says we are, it's easy for me to say Penn State now too, because over the course of the last 10 years, I've become so ingrained with the university that I now too bleed blue and white. So as we go through this, the education, innovation, entrepreneurship are at the center of Startup Week and play an important role in driving economic development within our communities. And I'm confident that Penn State's effort in this space have and will continue to positively impact the region and the state. I'm really looking forward to the conversation tonight. We heard the introductions of the folks. I think what's really intriguing about our panelists tonight is we've got folks who actually make capital investment, people who seek funds for crowdsourcing to support entrepreneurship, individuals who have lived on both sides of the fence, both as entrepreneurs themselves and working on and helping develop further fintech and other industries, and individuals who have been on the entrepreneurship side, but have also found a different avenue within a corporate structure to continue to drive further entrepreneurship and innovation. So, we're going to hear multiple dimensions tonight and issues as we go through this. So I am so pleased to have these four talented panelists with us tonight. And without further ado, what I would like to ask, probably start up a question to all four of our folks, and certainly if you want to elaborate a little bit on your background, I'm more than welcome to that. But kind of throw out a little bit of a general question here at the start is, what qualities and or traits are you looking for in an entrepreneur or in fact their idea? So I'd ask you to answer that question as you're looking for investments, or as you as an entrepreneur yourself, what have you seen in the marketplace? And Natasha, can you lead us off, please?
Yeah, absolutely. So definitely as an entrepreneur in the space, and part of our companies have worked with raising capital for what we called impact startups. So startups that are focused on greater good missions. And I think some of the things that you look for in entrepreneurs in terms of seeking investment are that one, they are driven and motivated to accomplish tasks and accomplish their mission by any means necessary. So I think that speaks to a drive and motivation that comes from a passion, which people can tell fairly quickly if you're faking it or if you actually really mean it. So I think that's one thing that comes through. And then two, another element is your ability to be humble and assess your strengths and weaknesses, because part of being an entrepreneur is also being able to say where you particularly excel and where your skill set does particularly well, and then where you may need help and resources. So being able to be humble in understanding and kind of self-reflecting is also a very good trait for entrepreneurs that we also look for as we look at companies. But in my personal day-to-day, when we're approaching investors for VC backing or investment, those are some of the things that they really want to see. They want to see that you have a fair assessment of yourself and that you understand when you need to ask for help and you understand when you need additional levels of expertise. So I'd say that those are two key points.
Great, Natasha, thanks. John, how about your thoughts?
Yeah, absolutely. I mean, just echoing what Natasha said, highly motivated, passionate is something that we're certainly looking for out of entrepreneurs. Decisive as well, being able to make those hard decisions when you don't really know if it's going to be the right decision or the wrong decision and having to figure that out. We have something at SeedInvest that we kind of live by, and it's basically, fixed on the vision, but flexible in the journey. And I think that that's extremely important for entrepreneurs in the sense that, you have to be creative because you know what you're trying to get to, but you don't necessarily know what you're going to run into. And especially the last year with COVID, I mean, tons of businesses had to shift and pivot their ideas kind of with what's happening. So I think being creative in the sense of being flexible is certainly very important as well.
Great. David, in terms of your aspect of, living on both sides of the fence here, what are your thoughts on the question?
Yeah, Jim, for me, it's somebody who sees the world differently, who has a unique point of view, oftentimes contrarian, but just somebody who can connect dots that aren't connected today. So somebody who has the vision to do that. I think vision is critical. Ultimately, if they're going to run a successful company, they're going to need to not just have the vision themselves, but then be able to impart it in other people. So I think vision and connecting unique dots is critically important. Then I completely agree with Natasha that self-awareness is something that over time is just essential. And the self-awareness of knowing when to stop banging your head on a certain wall and go banging on a different wall. The self-awareness to know when a thesis that you had is not playing out. If you're building a company with somebody, that is something that generally comes with experience and over time. But people that can demonstrate that early on are the fun people to build companies with.
Yeah. Hey, Matt, in terms of, we talk kind of like feel free to add some more in terms of the entrepreneurial qualities, but what are the qualities of kind of the ideas, if you will? And I know that's a pretty nebulous question, but is there anything you look for with regard to ideas or concepts along with the entrepreneurs? Matt, you may be on. There we go.
Yeah. No, I would say that I like to say generally that we don't invest in ideas, we invest in people, and sort of the pithy statements like there's no such thing as a new idea. Only ideas whose time has come, and the people who are bringing that idea to the right place at the right time. So it's really not the idea itself that we're looking at. We're looking at the people and their appropriateness to bring that idea to realization. So it's always a couple of very simple things. There's and again, we're fairly broad, so we look at a lot of different ideas. Sometimes things that we're not qualified to assess, quite frankly. But I think we're pretty good at accessing the people. We look for passion and persistence, we ask three very simple questions: who cares about this idea, and why you, and why now? And those things sort of frame the whole thing up. You got to find some people who really you're affecting, that you're making a difference with, in that it really can make a difference. And we're a venture capitalist, so we're not trying to find things that make a difference to you or to the local community. We're trying to find things that make a difference in the world. So big ideas with the right people who have the vision and passion. And most of all, what we look for is people who are ready to persist. I like to say that there's only two types of days in the life of a startup entrepreneur: days you can't win and days you can't lose. And you better be able to have the ability to work through those days you can't win, and carry it through.
Hey, Matt, I'm going to stay with you a second. So when is the right time for either someone to be reaching out to you or having conversations? What is the right time in the life cycle of that business, or the early stage of that business, that your world comes into play?
I would say try and get to know your funding source as soon as you possibly can. So, when you're playing on the Little League baseball game, get to know your funding source 10 years ahead of your idea, because people are going to invest in people. And investors are going to invest in people. And so the more I know someone, the more I understand them. And I would say we watch for a long time. We've not made an investment in anyone that I have known for less than 6 months, I would say. And sort of more like a year or two, we watch. And we're very much watching for that say-do cycle. Tell me what you're thinking. Did you do what you said you were going to do? What are you going to do next? in making an investment, getting to know people over time is very important, because we expect to actually have a long-term working relationship with anything we invest in.
Yeah.
So as soon as possible is the short answer.
So I'm going to go to certainly the rest of other panelists. Jon, how does someone become known? What do our budding entrepreneurs here need to do? How do they become known?
Yeah, I think, I think networking is a huge aspect, right? I mean, especially like right now, you have the entire Penn State network. There are so many people that went to Penn State and graduated and are more than willing to, help. So I think getting your name out there, participating in anything you can, whether that's pitching your idea or, discussing with people how, what next steps should be. Just getting your name out there as much as possible, I think, and talking with as many people as possible, and getting that feedback from different, people with different backgrounds, I think is really important.
Yeah, and I'll jump in there. I think I'll just double down on that message, because I think a lot of times, especially for the perfectionists in the room or folks that are just starting off, you really focus on kind of like getting everything all bundled up and packaged up beautifully, before you talk about it. And it's kind of contrary to how you build these relationships in the startup world, especially as it pertains to funding. So to Jon's point and to Matt's point, it's a lot about, making sure you're talking to people about your idea and your vision, and talk to them about the progress, keeping people updated. And whether that be through your social media, and you make sure you kind of keep that up to date, or your company's social media or social footprint, it's really important to, talk about the whole journey and not kind of necessarily wait until everything is like buttoned up. Because if you wait until then, if that's when the relationship starts, then you can imagine if that's also when you need capital, you're kind of starting at a the deck is stacked against you, if you will. So something that I wish I did earlier was, talk to more people about the core idea and how I was building it, and kind of my development as I moved along, versus kind of waiting for this inflection point to kind of lay it on everybody, which, doesn't necessarily work as you're trying to build these long-term relationships for funding.
Great. Hey, David, I'm curious of the venues that some of these connection points can happen. Is it one-on-one? Is there different mechanisms for people to, certainly pitch their ideas to build those relationships?
Yeah, I mean, absolutely. It's almost, I guess, sort of limitless. I think that, one-on-one, absolutely. There are obviously meetups in every community. I think you don't underestimate the power of the cold call. Especially if the frame is not like, hey, I'm trying to sign your company as my customer. It's more, hey, I've got an idea. Can you give me 30 minutes to just tell me what you think? I think that can be incredibly powerful. And I do a bunch of those calls, and they're fun. So I would use, certainly for the folks on the phone, I would use your professors, yes, but LinkedIn is your best friend. And again, you'd be surprised at how, again, sometimes very, very senior level people will respond to a sort of cold call if you frame it correctly.
Great. I think that's great advice. Not that I want to dwell on the negatives here, but I think if we can give some lessons on maybe some pitfalls to avoid, are there, really this is for any of you, are there shortcomings or issues that are considered non-starters when you're either looking for an investment or hearing the pitch? Are there certain things that just, people should avoid, or is it, everything's free game?
I'll jump in. I would say one thing that I find often, especially in the young entrepreneurial community, is I guess the label is a little bit of naivete, but if you ask the question, who's the competition, and the answer is, we don't have any competition. Nobody's thought of this before, or we're really unique. You got to remember, there's 7 billion people in the world, or more, or whatever there is. And so if this is an idea that only 1 in 10,000 people have, what is that? 700,000 other people have the same idea somewhere. It's a big world. People have been working on stuff. So be aware that, there is a competitive space out there, and you have to, find, yourself in the right place at the right time. That answer that, hey, we're the only ones who thought of this, By the way, sign an NDA before I'll tell you anything. You know, it's not, it turns me off very, very quickly.
I'll echo the NDA thing. As you start your world in connecting with VCs and approaching VCs, you'll learn very quickly they will stop talking to you if you ask them to sign an NDA. More so because there's likely no reason that you need them to sign an NDA, and that just frustrates them even more. So think about whether, you know, if you're going this approach of NDA before you share your idea, really think about, you know, what it is you're trying to protect and if that's actually necessary. Because to Matt's point, a lot of VCs stop talking to you as soon as you say, oh, I'd like to have a meeting and talk, but we need you to execute this NDA. So unless it's like something that you absolutely need for a discussion, or maybe it's something that's revisited later in discussions as you've kind of pitched the initial idea, I've always found that kind of trying to walk the NDA route in the very beginning of these relationships is not very helpful.
And I just pile on it a little bit, Natasha, because I spent most of my career on the other side of the table, and I was a startup for a VC out in the Bay Area, and I tried that. And again, we had some very proprietary technology, and I was talking to a VC. My first VC meeting, I said, hey, you know, before I answer that question, I'd really like to be under NDA. I literally got thrown out of the room. Get out of here. You know, if you're here in my, you know, you're here, and think about it from your funder's point of view. I'm funding, you know, I'm in the business of trying to find the best thing to fund. I sign an NDA, that's just a license for you to sue me. I'm not going to do it. And second of all, if your idea is such that in a first meeting, you can tell me something that I can compete with you for, somehow that's not a very big barrier to entry. So it's just it's a complete non-starter and a complete turnoff, if you will. Don't think so much about your idea to say your idea is what you're differentiated on. It's your passion, it's who you are, it's why you're there. Why you, why now? It's not your idea.
Dave, any not to focus on negative, we're going to switch off this in a second, but any other kind of lessons learned non-starters that from your
Sure, Jim. I'll talk about failure all night because I've done a bunch of it. So no, I think that for me, simply a lack of awareness of we call this the why will fail question. So somebody who doesn't know, like somebody who cannot identify the landmines that are ahead of them that they'll need to overcome is a very, very bad sign, because no startup path is smooth, at least very few of them, right? So somebody who, for me, somebody who has a great answer to the, like, hey, if this thing fails, here's why, that's a good thing. And if somebody who's like, you know, you can believe in your idea fully, right? But you also need to be aware of the things that are in front of you for you to overcome. So that's really important. That awareness is important for me.
Hey, Jon, what are there some misconceptions you think that folks come in with that you know, maybe they should be better informed about? Or
Yeah, I think certainly. I think definitely misconceptions about, you know, the industry that my company is in, specifically our little segment of it is equity crowdfunding. And equity crowdfunding can get a pretty bad rap. You know, some common misconceptions are like, you know, the types of investors that are in our network. We've developed a network of over 500,000 investors and entrepreneurs. And about 70,000 of those are accredited investors, angel investors, some experienced, some a little less experienced, and institutional investors as well. So family offices and smaller VC funds are utilizing us for deal flow. So certainly we do have a network that has the ability to fund these investments and fund them quickly. Mm-hmm. So I think that's kind of a common misconception with equity crowdfunding. And alongside of that is, you know, basically funding from venture capital and funding from an equity crowdfunding platform being mutually exclusive. That's certainly not the case. You know, we have numerous companies that we've worked with that have VC backing before working with us. We've invested alongside of multiple VC funds, so where we receive a small allocation in the round. And we've actually backed companies before VC funds had gotten in. So I think there are numerous misconceptions about equity crowdfunding, of course.
Hey, Dave, you work in a different structure. You're working within a Fortune 500 company, but as a fintech startup entrepreneurial, innovative role. How did that emanate, and why is there opportunities for others in different spaces along these lines versus the pure VC or other angel?
Yeah, we're unique, and I think germane to the sort of theme of this event is finding different ways to fund your idea. We're Numo, the company that I lead, it's sort of part corporate venture, part incubator, part part sort of venture fund, and it's a weird mix of those three things. But the basic premise is to sort of invest in and build companies from scratch, from inside of a Fortune 500 company, as you said, Jim. So the thought was, rather than sort of acquiring companies down the line, which PNC has done and will continue to do, rather than just in addition to just investing in companies, which PNC has done and will continue to do, what if we created an arm sort of outside of the bank? So we're a separate company, but we're an owned sub that creates startups that uniquely plays on the strengths of a large parent company. So existing customer base, regulatory expertise, access to a bunch of data, stuff that, not to mention like launch customers, whether it's an enterprise customer in PNC or our end consumers. That's all stuff that is really, really hard to get as an entrepreneur. So it's a unique model. I don't know that, will it catch on? I don't really know, but I think that the folks that are listening that are thinking about different paths, there are a lot of different sort of corporate backed incubator models that are interesting, and they exist in all different industries, certainly in financial services, but others as well. I think it's at least interesting to take a look at those and decide if you can apply for usually a small amount of funding and maybe a sort of seat at the table with potentially an enterprise customer. So Numo is a very unique kind of version of that, and that we're trying to build our own companies. But I do think the kind of corporate venture plus corporate incubator route is an interesting sort of area for new entrepreneurs to keep an eye on.
Thanks. Natasha, you've been involved with several startups, and as well as your current role right now. How has funding changed in the last 5 to 10, and where do you really see it going? Do you see any fundamental shifts in funding in the
Yeah, so
foreseeable
I
future?
think what we've seen, I think, happen is that in the advent, and we were actually, one of my first companies was called Return on Change, and it was one of the first companies to start equity crowdfunding 10 plus years ago. But then we kind of put the brakes on it as the Jobs Act came to fruition, as we were trying to figure out what regulation was around equity crowdfunding. And I think just showing that like 10 years ago, we kind of soft tested our equity crowdfunding idea, and then like amazing companies like Jon's exist now, right? And they are able to continue to grow, develop, and have created this class and source of, funding where they have other competitors, right? So they've created this niche where, and to Matt's point, there are a number of competitors that are working within this crowdfunding equity space, but, a few do it well and a few continue to rise to the top. And I think that as you look at that kind of progression to now, what we're seeing is that with the digitization of finance as a whole, there are more ways to reach folks for capital. And whether that be through equity crowdfunding platforms like SeedInvest, whether that be through, opportunities like I Fund Women, which are just online platforms that allow folks to list their opportunity in a digital way and outreach to investors in a manner that hasn't been done before. So the traditional way of capital raising is you get on a plane or get in your car and you start hitting the road, right? And you start booking meetings and you're doing things in person. For a number of reasons, including the pandemic now, that's not feasible, right? And I think pre-pandemic, the digitization of finance was already in full swing, in the sense that there are more companies starting to pop up that focus on how to make capital raising easier. And with our base platform, Dark Matter, we focused on how do we make capital raising easier for the alternative fund universe. So how do we make it easier for fund managers to reach accredited investors? And as we continue to grow, we're starting to see that, a lot of these silos are popping up. How do we get startups that are focused on fintech more investment? How do we get startups that are focused focused on CPG, consumer processed goods? How do we get startups that are focused on the environment? So you start seeing a lot of these silos where I think like in another 5 to 10 years, it's likely going to be even easier to reach potential investors for capital. But what we're seeing now, I think, is that there are a lot of opportunities more than ever, aside from a traditional bank loan or a traditional kind of like roadshow with VCs, that allow more opportunities for you to reach more investors and more firms so that you can, in theory, more easily access that capital. The caveat there is you still have to do all the work. So the ease of the interaction is great, but you still need to have metrics. You still need to have pitch decks. You still need to build those relationships. So though kind of the interaction has gotten a bit easier and more efficient, it doesn't take away all of the substance that's needed to still, you know, pitch your company as a great investment or opportunity for any of these investors.
Great information. Matt, yeah, how about you? Where do you see things going? And then I also would love to hear a comment that Natasha touched on is, you know, obviously we're been through the pandemic, still are in parts of it. And so how has the world changed, not only with regard to the pandemic, but where do you see any changes in capital raising going in the next, 5 to 10?
Well, again, I think that Natasha hit the vein of it. I mean, I think it's the democratization, if you will, of funding. The fact is that, you know, entrepreneurship and early stage capital has disproportionately gone to a few geographies, and also not been very diverse. And the awareness of that is the first order to solve the problem. But as Natasha pointed out, there's now all sorts of focused funding sources that are trying to be focused on women-based startups, minority-based startups, underrepresented startups. Go use that very much, because that's essentially, again, we've created this great communication infrastructure, and the pandemic has taught us all to connect as best we can online. And that is, you're trying to find, again, the connection to your funding source that makes it so that they care about you and you care about them. And that is something that now, if we can get, sort of diversify the geography, you don't have to be in Silicon Valley to do a great startup. You don't have to be in Austin or New York City. We can be here in central Pennsylvania and find great sources of startups. That's our role, quite frankly, and that's the thesis behind 1855 Capital, is we're here, again, to start to be a VC funding source in the venture capital community. And my job is to be able to identify entrepreneurs and ideas I think are interesting, and then connect with domain experts who can tell me whether or not they can make a difference. And so it's the spreading and the democratization of funding that I think is happening. I think the communication technology is assisting in that, and I think our job is to continue to assure people, think through how to make that happen.
How does the alignment? I mean, your world, alignment and affinity are really important, and obviously alignment and affinity with everything Penn State becomes important. How does one begin to leverage those alignment and affinity aspects?
Well, in a lot of ways, for us, it's a matter of, we're putting a shingle up and saying we're a venture fund operating at State College, PA. And so, we asked earlier, how do you make sure that you're connecting? Well, it's my job actually to be aware of sort of what's happening in the Penn State community. And if you go to these pitch competitions, Happy Valley Capital is running pitch competitions, and the Launch Box, and down at the launch boxes around the Penn State community, we tend to hear about, and we try and sort of keep our ear to the ground and the like, and then we try and expose those that we think have real legs to funding sources that can really help accelerate it. One of the success stories we had is with Hunter Swisher, a Penn State undergraduate, and I have to say, I knew Hunter, while he was still working at the Launch Box and doing pitch after pitch after pitch. We actually then formed an alliance with a venture fund coming out of a large technology conglomerate, Malmy Ventures that was with the Andersons. And then we did a follow-on round that brought in several other investors from Morocco and New York City. So now we have, you know, a syndicate of 4 different venture funds. Of the 4, we're the affinity fund, and the other 3 are ag tech investors. So, you know, that works, right? We can be the local eyes and ears to identify the opportunity. Our job is to bring, you know, both the financial bandwidth and the domain expertise.
Thanks. Hey, Jon, you're in the democratization of funding, but I'm also curious as to how your investments are sourced. I mean, where are you making and your company making connections with regard to opportunities?
Yeah, absolutely. So there's kind of 2 ways, essentially. You know, we have a venture team that very similar to like a VC fund will go out and source deals, you know, keep an eye on different areas. We're geographically agnostic, we're sector agnostic. So we're really, you know, open to looking at anything kind of in the early stage space. So from that, you know, there's a wide range of different, you know, possibilities and companies that we can be looking at. So we're going out and sourcing deals. At the same time, we have a raise page. So you can actually visit our platform and literally submit, you know, an application to raise capital right on the page, and reach out directly to us if you have any questions, and someone will go ahead and answer that or jump on the phone with you. So, you know, those are kind of the 2 ways that you can access us. And, you know, we have FAQs. And so we have a ton of information on our platform, as well as, you know, an academy and resources to learn, you know, when you do get to the point that you want to, you know, potentially submit an application to raise. So we try to make it as easy as possible. And, you know, to echo what everyone has said is already is, you know, that shift to online capital formation, it's here, certainly. So.
Thank you. Hey, I'm going to ask a question to Dave and Natasha, and that is, you know, is there any, this will be more on the fintech side, if you will, but is there any things coming down the line that are just going to permeate changes in the world? And the thing that comes to mind, obviously, in my mind, is blockchain. Dave, can you speak on that, or any other trends that you think that, you know, that may be a pervasive underpinning of some things to come?
You know, I think specifically in fintech, you're seeing a slow crumbling of an industry that is very, very entrenched. And you know, with due respect to Jim, you're in my employee.
Hey, it's my job we're talking about here now, Dave. So it's
my job too. Look, I think this is it's ultimately a good, like, it's progress, right? It's ultimately a good thing, and it forces, I can see it from the inside, if you will. It forces places like PNC to look at quote fintechs, if you will, and figure out what are they delivering that, you know, and how are they delivering services in a way that's meeting customer needs that is better than what we're doing, and how do we adapt? And frankly, and we're on record saying, like, most banks, most traditional quote banks won't survive, and that's our sort of core belief, right? So, but I do think that there will be a few major survivors of the existing folks, and there'll be a whole bunch of a wave of new companies. Many of those will get swallowed up, as we've seen, and as we're seeing in fintech. I guess, so the point there is, I think that if I look out over the next 10, 20 years, this won't happen in the next kind of 2 to 3 years. Like, it will be a slow roll, but it will be a massive change. I think you'll see a lot of fintechs, if you will, delivering core banking services in ways that are just far superior. Ease, you know, simplicity, all the things you're saying that are superior to what places like the incumbent banks can do today. And they'll use technologies like blockchain to do it, and like, you know, AI, and, you know, those things are all good. I think my last point is, I think this is what the sort of drumbeat that I hit is, what those companies are actually really good at is building technology that obviously is their core competency, right? We as PNC are a bank. We grew up being really good as a bank, right? It's like relationships, and those things still matter, right? But ultimately, I believe there is a sea change and a shift to how quickly can you meet the needs of a customer using all the technical tools available to you. That including again blockchain and data science, et cetera. That I believe will really play out and accelerate over the next 10 to 20 years.
Yep, I agree. I completely agree. And I think the bottom line is a reckoning is coming. It's kind of the way that we look at it in this fintech world. As I mentioned, I've been in fintech for about 10 years. And in the last 5 to 6 years, we've been in the world of digital assets and blockchain. And essentially what that means is we're looking at the next generation of fintech tools. And what that means is what technologies create enhanced efficiencies, create increased transactions, processing speeds, create connectivity in ways that they haven't been before. And blockchain is one of those answers. And the fact is that, the Securities Act of 1933 has been one of the regulations that has governed this industry since 1933, right? And we haven't seen much innovation happen on that front. What we are seeing right now is we're finally kind of hitting this crux where the advent of technology and adoption is kind of meeting this barrier, which is just the industry. And it's just like things just won't go, right? But now we're starting to see regulations start to develop, which, as everyone kind of knows in finance, or folks have been in it for some time, regulation is kind of like, that's what pushes everything else, right? Like everything is hesitant until the regulation comes down, which is why larger banks and institutions can't necessarily respond as quickly because they're waiting for, a lot of the dust to settle, if you will, versus startups who create that dust, right? They don't wait for anything to settle. It's kind of like move fast and break things, right? And I think that as we continue to grow and as we continue to see this digitization of finance actually meet its kind of, it's in its infancy now, meet a bit more maturity, you're going to see the consolidation of the markets happen, and you're going to see a lot of these larger institutions embracing fintech tools in one shape or another. And that can look like many things. A lot of people are already using fintech tools. The fact that you can even sign on to online banking is a fintech innovation, right? But what do we need a brick and mortar bank for is some of the questions that come up now, right? So as the younger generation, which is likely a lot of people in the room and even younger than you, are starting to interact with financial tools, they're interacting with them in ways that they have never before because they don't need and they don't traditionally go to a physical bank, or they don't necessarily go to any of these kind of like big folks for services, simply because one, they're unaware of them because it's not necessarily marketed to them, or two, a neobank has popped up and started directly talking to them. So you're starting to see these kind of shifts in one, societal norms and global movements that are really a result of the digitization of finance and the availability of digitized tools, period. So just think about, how things can move even faster. For example, the kind of one of the big advents that's coming, that's on the docket and things are being talked about are CBDCs, so central bank digital currencies. What does it mean when nobody uses paper money anymore and we use digitized money? So let's take the utilization of your credit cards to another level. So even that looks different. And in order for that to exist and thrive, other systems need to be built to support that. So you're going to start seeing a lot of these ecosystems pop up. A lot of traditional banks are experimenting with them via sandbox solutions. So folks who are creating fintech startups or interested in the world of fintech, sandboxes with large bank partners, some of those are very good for giving you access to data and access to networks and opportunities, but explore what it means to, and think about like what that ecosystem involves, because even, the shift to online services and accessing your bank online, right, needed the creation of tech teams that could actually build that infrastructure, compliance and security teams that can ensure that it's all following all the checklists of whatever needs to happen from an SEC or FINRA perspective. And then, of course, all of the people, cybersecurity people who make sure everything is safe. So I think that you're going to start seeing the progression of a lot of these kind of sub-industries that support the development of a lot of these bigger things. And blockchain is definitely going to be one of those core technologies.
Great, Natasha, thank you. And and because of all those comments, I'm really glad we have Numo as part of our organization. Hey, I want to get all four of our panelists to really think about this last question, and I really want to give each of you a chance to, talk for a minute or two and think to yourself of what would you be telling your early 20s self. If you're back in the situation where many of our listeners here tonight are, and we may have covered some of them already, but what's the big guidance that you would give folks? And Matt, if it's okay, I'll start with you.
I guess to my 20-year-old self and to all to the folks in the audience, the entrepreneur, think bold, think big, right? Really try and be brave about what you're thinking about. And I can remember my 20-year-old self, I got myself sort of engaged with a couple of researchers who were doing things in communication technology. And it was sort of one of these things where, hey, the communication technology is going to change the world over the next 30, 40 years. And it did. What's going to change the world? And quite frankly, look at some of the big things. The fact is, we're going to completely change. You want to talk long term? We're going to completely change the energy delivery of the entire planet in the next 30 years, or lose the planet. So there's a $5 trillion energy industry out there that needs a whole new set of technologies. Go think about those big things and make a difference. Don't be afraid, because there's big things out there, fintech, blockchain, carbon-free energy delivery that changes a $5 to $10 trillion industry. These are huge opportunities. Don't think of them as challenges. Every challenge is an opportunity to excel.
I think those are wise words. Jon, you don't have to think back as far as I would, but
No, just a few years. No, but listen, I mean, I totally agree, kind of piggybacking on what Matt said, is that, you can't be afraid to take risks. And, when I graduated Penn State, I've considered myself having an entrepreneurial mind since I was young. But when I graduated Penn State, I took a conservative approach and I started working for Citigroup. I went into traditional finance. I had an incredible mentor, an incredible manager. I learned a ton. But I made the jump to a startup. I'm working 2 times the amount of hours and the passion is there and I'm enjoying it more than ever. So I just think, don't be afraid to make the jump, and, it's going to be hard and you're going to learn a ton. But it's totally worth it in the end. So.
Just not to put you on the spot, but I'm curious, motivation, I got to phrase this the right way. Is it about the excitement and about the journey? Is it about the looking to create something and win with it? Is it about the money? What's the driving passion?
Yeah, it's definitely not about the money. No, it's certainly, it's about the journey. I'm learning something new every day, every hour of every day, really. And you fail all the time. And in the beginning, it's like, oh, I hadn't failed that many times because there's not much to fail when you kind of are just going the traditional route. But now I'm failing all the time, and it's a great experience to have it. So I think that it's kind of the end, and our end vision is incredible and something that I totally believe in. And kind of throughout the journey as well has been, an incredible learning process.
Okay. Thanks, Jon. Natasha, what would you tell your 20-year-old self?
Yes, I would say a lot of things. One is definitely thought of learn as much as you can about everything you can. I remember being 20 and being like, I know what I'm going to do. I'm going into marketing and I'm going to be a brand marketer and that's it. And I also said, finance is one of the industries I would never work in. And here I am 10 plus years later in fintech, right? A world that I did not necessarily think I was going to get into. And I love it. And I think that it's important, especially as you're younger in your 20s, to give yourself the room to grow and learn, because a lot of plans change and things that you think are, where you're going to land may not necessarily be where you land. And it's probably quite often not where you land. It's kind of like the thought of like when you pick your college major and you may change it quite a few times, and then who knows where you end up by the time you actually graduate. It's kind of like that, and it kind of extends throughout life, I guess, to a degree, in the sense that, be ready to be flexible and be open to what other opportunities can be, because you never know what that looks like. You never know what technologies are going to exist that pique your interest and then make you, pull you into an industry. You don't know what's going to happen with, the world of social media networking was not necessarily something that existed, years ago. So if you locked yourself off to that, like, you may not even have the opportunities that you could today. So I think being very inquisitive and making sure that you're spending time learning things, and especially if it's something that you think you really don't want to do, I think you should learn a little bit about it so that you can start at least having your brain work and figure out if that is actually a no or if it's a potential yes. So I think that that's important. And then I always say as well that I think it's great to know what you want to do. I think it's even more important to know what you don't want to do. So, and I think you learn more about what you don't like and what your strengths do not lie as you do more. So I think say yes to things at a younger age, get experience, get exposure, and start figuring out, one, where your strengths lie, but two, like, what do you like and enjoy doing and what do you absolutely not? Because some of that will be very useful as you try to guide and really figure out, your companies, your startup, and even pitching some of your ideas.
Okay, thanks, Natasha. Hey, Dave, how about the last but not least, what would you tell your 20-year-old self?
I would just say that I think we all fixate on like what, trying to manufacture our career and, sort of optimize like what our future is going to look like. And I'd say the only thing that's guaranteed is whatever you think your future is going to look like. The only guarantee is that you're wrong. Like, that's the only thing that's what I tell myself too. You don't know what your future is going to look like. What you can control. So stop trying to like, plan out the next 16 turns that your career is going to take. What you can do is put yourself around smart, motivated, passionate people that know things that you don't, that you can learn from, and then follow the doors that open from that. Even if it's failures early on in your career, that's fine. As long as you're moving forward, learning from people that are smart, passionate, motivated, that know things that you don't, good things will happen from there.
And we've got just a couple minutes left. I want to once again go back to our four panelists and say, is there any other items here that you think that are really important for our listeners to hear is our budding entrepreneurs take off that we haven't yet discussed tonight?
I just want to touch on one thing that Jon kind of mentioned is like coming into entrepreneurship and startup world for the money is not a good plan, because one, like Jon said, you end up working harder than you did at all at your 9 to 5. So that's one kind of okie doke that I like to say, that people think you come in and you're like, oh, I make my own schedule. You do, but then it's probably like, 22 hours long, right? So there's that. And two, things always take longer than you expect. I think that there are a lot of wonderful unicorn stories and a lot of, startup stories of people who get billion-dollar valuations plus hundreds of millions of dollars in funding. But I think if you look at a lot of the folks who are able to achieve those things, you'll see that it took quite some time for them to get there. So I think part of it is kind of aligning your expectation on the timing for when you think things will accomplish. I mean, like, I thought we were going to be, like listed on, exchanges, like, and everything, like in year 4, right? And like, that is just not a reality. And I think that the more that you wrap your head around the long-term nature of what you're trying to build and what that means for your business, the easier kind of planning and stressing will be, because in my experience, things always take a bit longer than you assume they will.
Matt, Jon, or David, anything else?
I mean, I think that's that's really good advice. The fact is that you're attracted to these, I can't tell me how many times I've asked an entrepreneur, why are you interested? Well, I want to work for myself. Well, guess what? You're not working for yourself. And if you take money from an investor, you're working for somebody, right? So there's none of this idea that, hey, I'm just completely independent and the like. No, you're going to put a lot of time in, and remember, you hear about these success stories. Behind every success story, there's 10 failures. And you don't hear about the failures. They're not advertised as much. So be prepared for the downs, because there's going to be more downs than there's going to be ups along the journey. And you got to be persistent along that journey. So be prepared.
Okay. Any other comments?
One kind of, this is somewhat of an anecdote, but one superpower that I observed along the way that I've tried to pick up is the ability to ask great questions, even if you're giving a pitch. Some people have this knack that I got to observe. It's just, if you can ask a very good question, the places that will take your pitch, or if you're trying to sign a customer, think when you go into a meeting, think about a question that different than just a cursory kind of like, what do you care about in an implementation, whatever it is, think about a really good question, and then how would you build on the response that you get. That's a very interesting and very powerful tool that is worth building.
Great. Well, we've got 8:10 right now. We're kind of closing in on our time. So first of all, Jon, Natasha, Matt, Dave, thank you so much for your time. If there was one thing that came through loud and clear tonight, it's obviously it's going to take passion and commitment. And rest assured that there's resources of folks here, of James and the folks at Penn State, who I'm sure are more than happy to talk and guide you along the way. But once again, it's that passion, hard work, and resiliency that's really going to pave the way. So without further ado, James, I'm going to turn it back over to you. But thank you, our panelists.
Thanks, guys.
Thank you so much, Jim. Thank you, Dave, Jon, Natasha, Matt, for your time. That was a real masterclass. So this concludes our Startup Week programming for this evening. However, we have 15 more virtual events tomorrow. So please tune in. I want to point out in particular, President Barron is hosting his annual virtual student, well, it's not normally virtual, but this year it'll be our virtual student recognition reception at 6 p.m. where he will recognize the students that over the course of the year have won 10 different entrepreneurship focused competitions held at Penn State. So please tune in. It is public. Of course, remember to check out events through the rest of the week at startupweek.psu.edu. And thank you again for attending Modern Financing Options for your venture. Thank you so much. Take care.